I'm Corbett Wall with DB Auction, here with your feeder flash for Wednesday, May the 11th, brought to you in part by Vitalix, an American family-owned company that specializes in livestock feed tubs to meet your every need. Livestock is your livelihood, tubs are their expertise. Get the blue tub, visit Vitalix.com. Fed Market Follies. We haven't got to the middle part of the week yet, and we've already got a $10 price spread, live basis, direct fed cattle market in your 5-area feeding region. We never have that. We had that on Tuesday. $10 spread, confirmed sales on a Tuesday, stretching from 138 all the way to 148. Unbelievable. What's going on here? Well, the way things are coming up with our big numbers of market-ready cattle about to hit the show list, and most of them being calves or cattle that were put on feed as big calves, they're new croppers. They're not going to grade as well. They're not as attractive to your packer buyers. They're going to have lighter carcasses. Your packers know that we're going into a time whenever we're going to be tight on supplies, so they want to keep those carcass weights up. So you can't really blame the packers for trying to buy cattle with time on them to kind of set the market up for a fall. You can't blame them for seeking out old crop fed cattle, the few that are out there, and the better grading cattle. You can't blame your sellers for charging them a premium for those cattle whenever they do have them. You can't blame your sellers for selling cattle out front a bit, 2 to 4 weeks or maybe a bit more than that, because look at the basis right now. Let's say you sold some fed cattle, old croppers at 148, they don't pick them up for 2 weeks. You're a hedged feeder off the June live cattle futures, and the board closes at 132.40. You get to put $16 plus in your pocket, plus the fed cattle probably made a little bit of money too. Not a bad deal. You can't blame everybody for their angle on what they're doing, but it's just crazy. You never see a $10 spread. And then we've got such a disparage between what your fed cattle are bringing in the northern plains as opposed to what they're bringing in the southern plains. You can see why the guys in the northern plains still want to negotiate on their cattle, because they know how to negotiate. And they still negotiate enough to where they have some leverage in the market, and they can do that. You know, I heard of guys selling mostly old crop, really good cattle in the northern plains from 144 all the way up to 148. Well, in the southern plains, they sold them from 138 to 140 and a half, and you can't tell me there's not some old croppers in the southern plains. Now, likely they have a southeastern origin or something like that, but we can make anything grade now with those cameras that they have on the grading line without a human heart beating there, grading those carcasses. Ever since we brought in instrument grading, the grading has just been off the charts. Cattle that used to grade 35% choice are now 80% choice or better. I realize that we're feeding them a bit longer, or we have been. We're probably not going to be moving forward with the cost of gains. And I realize the genetics are some better. They're not that much better. You have to remember that those instruments, those cameras that they're using to grade those carcasses now it's all being oversaw by the USDA meat grading service, but those cameras belong to the packers. They do not belong to the USDA. And it's one of those great deals that nobody says anything about, because the packers love it because more of the cattle are grading. Your producers are loving it because more of the cattle are grading, and your consumer is left holding the bag and they don't really know the difference. So that's the way that deal is going. But you can't tell me there's not some old crop cattle in the southern plains that aren't sure enough worth that big price that the northern plains guys are giving. They're not all in the AMAs. Now, a lot of those better cattle are in the alternative marketing agreements. It's not all junk that's available for negotiated trade, but they don't know how to get more money for them, because they don't sell enough negotiated to have any leverage in the market. They're just tickled to death, if the packers will come bid them on what the cattle that they have for sale. So why did they not ask more? Because they're scared to death of the packer, because they're afraid that they're going to get blackballed and they won't get a visit or a call from them for several weeks. Why did they join the AMAs? Because they're scared to death of the packer, and they only have to deal with them once a year if they get into these alternative marketing agreements, and they can do what they can then. They have a little bit of leverage because they have a whole year's worth of cattle to work with there, and they can try to get their best deal, and then they don't have to deal with them again until they renew that alternative marketing agreement. And they just let the few guys that are selling negotiated haggle on the cattle, and they don't have to fool with it anymore. Up in the northern plains, why did we have two guys that were going to testify during the hearings of the Cattle Price Discovery and Transparency Act? Why did they not show up? Because they're scared to death of the packer. Why does NCBA go to great lengths to mainly represent your packer, and then put a face on it where it looks like they're doing the best for the industry, when anybody that really knows what's going on sees that they're only lobbying for the packer? Because they're scared to death of the packer. Why is this industry in such a shit show right now? Because everybody's scared to death of the packer. Nobody in a free market system should have that much power. And if you don't think they're working together, you're fooling yourself. That's why we've got to have this Cattle Price Discovery and Transparency Act to force them to participate at some level in negotiated trade. It would give your guys in the Southern Plains so much more confidence whenever they had cattle to sell and they know the packers want the cattle. They could turn down that first bid. They could turn them down, and if they're one of the few guys that's got cattle in loose hands to sell negotiated, they know they're going to come back again. It would be great for the guys in the AMAs, because those guys that are selling negotiated would be able to negotiate a higher price, so that base price for the AMAs would be higher, and it would benefit them. It would be better for everybody in the business. It would be especially better for your small independent feeder that doesn't really understand all the different premiums that the guys are getting on those AMAs, and then they would get a library that we're probably going to have to work on for a while to get it to where we can understand some of that stuff, or get it through the filters where we could see what's actually going on rather than just big wide price ranges. But it would help them. It would help the entire cattle industry, not necessarily the beef industry, but the cattle industry, if the packers had to tell us how many cattle they have scheduled for delivery for the next 2 weeks. It would just help a lot, guys. And I know some of you are starting to come around a little bit and realizing that it would. It doesn't do any good to come around in your mind. You have to tell your groups, your grassroots groups. You grassroots groups have got to get together, form a letter, and send it in to your U.S. representatives. Send it in to the affiliate that you're with, the nationwide cattlemen's group that you're with. You've got to do something to get this deal done. It's not dead at all. It's as live as it can be. We feel very confident in the Senate. We don't feel as confident in the House of Representatives. Now, if it passes with a big, wide margin in the Senate, that will help whenever we get ready to have our vote in the House of Representatives. But we don't have any shining stars to push this through in the House. It's just a whole different body. It's so much larger. It's over 4 times larger. We don't know. But Congress itself, both houses, are wanting to get something done bipartisan. And if we got this thing done in a bipartisan way, through the Senate like we will, then maybe the House will follow suit, and maybe most of the Democrats in the House will follow suit with the passing of it, because the White House has endorsed it. So, but it's just crazy times out here and what's going on in your fed cattle arena, and to see a $10 price spread, direct live basis on a Tuesday, it's just unbelievable. Let's talk about your board a little bit for Tuesday. June live cattle futures were down $1.15 at 130.240. We talked about how far they were from your weighted average on last week's negotiated cash fed cattle trade, and then they went ahead and stretched it another buck and change there. But I mean, nobody's complaining as far as you're a hedged cattle feeder, because man, look at that big swath of money. Even your cheapest cattle, some 138 in Kansas, you know, they're still getting a $5.50 basis there to put in their pocket. That helps. And you think, why do people hedge their cattle? Well, they've got to stay in business. Most of their lending institutions won't let them not hedge their cattle, but most of them hedge their cattle because a lot of times a year you can count on a big basis like that. Why it won't stay any truer than that is because nobody in the industry is long the fed cattle futures, and your packers are not long the fed cattle futures unless they're playing some kind of a hedging scheme. But for the most part, they're not either. You know, they're taking money, funds are taking money out of the plunging stock market, putting it back into commodities. Well, if you were a hedge fund manager and you looked at a commodity, which is a shallow pool, and you can totally dominate it, and you think, well, which is my best bet? Which way can I make it move the most, the quickest? Down. Hell yeah. The industry itself puts so much pressure on the market. You know, which side of the fund's going to put their toe on? Down. They're going to short the market for sure. You know, that maybe that's why these LRPs, livestock risk protection policies, that I talk about so much, and I'm telling you, especially for a backgrounder, they are the best thing going. Maybe that's why they're not so popular in your fed cattle arena, is because you know, the final price, the ending value, is based on what the cash market actually is. Your 5-area weighted average for what negotiated fat cattle are, even though we're bound to lose our negotiations if we don't get something done like this Cattle Price Discovery and Transparency Act. But it tells you what cattle are actually bringing. Well, hell, why not go with the board in a bastard month like May and have a big basis like that to cash in on? But it just doesn't really seem to be right there, guys. But what about your August live cattle contract? It was down $1.27 at 134.10. Your back months were down $1.27 all the way to your last traded month, and it was up just 7 cents with very little activity in there. Your feeder cattle contract for May was down 87 cents at 158.92. August was down 237 at 171.85. Your back months of your feeder cattle were down 165 to down 227. Grains were up after the big down day start the week, but corn was up just 3 1/4 cents at 7.75 1/4 a bushel. Beans were up 7 at 15.92 1/4 for the July contract. Kansas City hard red winter wheat up 10 3/4 at 11.75 a bushel. Fat cattle trade, just some kind of early trade, but in the Southern Plains we've established the market and it's steady. Everybody thought we was falling. I thought we were going to fall too. These packers still need cattle, and guys are still selling them with a little bit of time on them. They're going to continue to buy those cattle up. As long as we have a giant basis, your sellers are going to continue to sell them. But in Colorado, we had about 200s all, but it did print, so we still got 3 packers participating there. Just some mixed cattle at 140. Iowa only had about 2 loads. They were mixed cattle at 142, so you can't get a market there. But Nebraska had 3,200 head confirmed on Tuesday. The only live price was 148. I didn't even hear that, you know, in my text messages and things like that. No, you know, guys were boasting about 146 and 147. Didn't even know the 148 was on there until I looked at the USDA report and saw that it was confirmed. And it wasn't just on a load or two, it was on about 1,400 head at 148. The dress price that they quoted on there was 230. Kansas had 10,100 head confirmed on Tuesday, and there'll be a bunch more than that whenever they get the late afternoon sales that weren't put in right away rounded up on Wednesday morning. But your price was the same as it was last week, 138 to almost entirely 140. And some dress trade from 222 to 230. Texas about 5,100 head. That's pretty big for them for one day, especially early in the week. From 139 to 140 and a half, $2.50 spread in the Southern Plains. But 140 was the price on most all of them there. But very interesting trade this week so far, and we haven't even got halfway through the week in your fed cattle arena. Box beef cutout values lower a bunch on choice. Choice cuts 255.24 down 305. We thought it was rebounding late last week, early this week, but it fell back again. Selects down 78 cents at 242.35. Slaughter running at a really good pace so far this week, 246,000, 9,000 more than last week, 14,000 more than the same week a year ago. Let's talk about a fed cattle auction real quick. How about Stockman's Livestock in Yankton, South Dakota? Got my roving reporter back from being in the hospital there, and he does a good job keeping me abreast of what's going on at Yankton's fat cattle auction there. And it was about $1 to $3 lower, with conventional cattle selling from 141 to 146.75, and those drug-free and non-implanted cattle, the program type cattle, were up to 156.50. Thought that 148 was hot, and there was a major packer involved there that bought multiple loads. So, you know, we can still sell them negotiated. We can still sell them in the open market. We can still sell them at auction. Auctions would be one way that packers could fulfill their obligation if we had mandates. The online fed cattle exchange would be one way that they could fulfill their obligation with mandates. Negotiated grid would be one, even though I wasn't in favor of that. And then, of course, private treaty direct sales would be a pretty good deal. Let's talk about your feeder cattle markets. Real-time index on DV auction late in the day on Tuesday set at 156.03. That was down 30 cents. Your sales on Tuesday, Ozarks Regional Stockyard, West Plains, Missouri, 2,800 head through the ring, another 400 head through their in-house video with DV auction. The calves were mostly $2 to $4 higher. Yearlings and bigger feeding type calves were not well tested there. Beaver County Stockyards had a pretty good sale, mostly big yearlings there. In the big yearling feeder steer department, they had 259 head of your 8-weight feeder steers. They averaged 832 with a weighted average price of 157.10 in the Oklahoma Panhandle. Not too bad there. How about 362 head of 9 weights in Beaver, Oklahoma? They averaged 942 with a weighted average price of 143.73, and both of those weight groups of yearling feeder steers were about steady with a week ago's trade. Knoxville Livestock Auction Center in Mascot, Tennessee. They just had the World Champion Livestock Auctioneer contest there a year ago. How about 87 head, 578 pound steers at 187 and a quarter. Wow, put some wheels under those babies, about $12 or $14 worth, and see how they pencil out when you get them home. How about Phillip the Giant, Phillip Livestock Auction in Phillip, South Dakota, 103 head, 486 pound steers bring $227.50. How about Fredonia Livestock Auction, my buddy Brad Hahn there, he sold 123 head of 820 pound steers at $160.35. That's a spot right there. If you can get those 8 weights with an 8 front figure, bringing over 160, that's a hell of a sale there, guys. How about Lolly Brothers Livestock Market in Macon, Missouri, 63 head, 878 pound steers at $156.50. How about Kingsville Livestock Auction in Kingsville, Missouri? Steve Varner, my friend there, he sold a string of heifers, 116 yearling heifers weighed 709 at $160. But the best quote that I saw anywhere on Tuesday, your Row Grow top quote for the day, come out of Huron Continental Marketing in Huron, South Dakota, 74 head, 755 pound steers at $176. That's your feeder flash for Wednesday.